Welcome to the deep dive, where we really try to get past the headlines. Today, we're zeroing in on a major player in telecoms, T-Mobile. We've got their 2024 annual report right here, and we're going to unpack it. They're calling it an amazing growth year. So our mission, figure out how they did it. We'll look at the numbers, their strategies, and what it all means for them and, yeah, for you too, whether you're a customer or just watching the market.
Exactly. And, these annual reports, they're gold mines. You find things the headlines totally miss. It's about connecting the dots,
Yeah.
right, between the business segments, the financials, their plans. Especially when a company makes a big claim about transforming itself, we get to see the evidence.
Okay, let's dive in then. T-Mobile made this bold statement for 2024. They shifted from challenger to champion.
It's-
So how did they actually pull that off? They point to this simple and consistent formula.
Right. The best network, best value, and best experiences. They keep saying that combination is unique. It feels like the next step from their whole uncarrier strategy,
Yeah.
getting rid of contracts, overages, all those annoyances.
Yeah, exactly. And when you look at the 2024 customer numbers, well, they seem to back up that champion idea. They hit their best ever postpaid phone churn.
Meaning fewer customers are jumping ship. That's critical.
Definitely. And for the third year straight, they added over 3 million postpaid phone customers. In total, 6.1 million postpaid net adds overall. That's best in the industry for the 10th year running.
10th year. That's quite a streak.
It really is. Within that 6.1 million, 3.1 million were specifically phone customers, also industry best. Plus 1.1 million new postpaid accounts. So whole families or businesses signing up.
Right, not just individual lines.
And it wasn't just phones. Their high-speed internet, wow, 1.7 million net adds there, again, leading the industry, third year for that. They ended 2024 with over 6.4 million home internet users.
That's rapid growth in a relatively new area for them.
Totally. Altogether, end of 2024, they had 129.5 million customers. Just huge scale. But what really jumped out at me wasn't just the number of customers. It was that they're getting existing ones to, well, spend more.
Yes, the ARPA growth.
Exactly. Highest postpaid average revenue per account growth in 7 years. Driven by people picking premium plans, deepening their relationship, as T-Mobile puts it.
And this is so important. ARPA tells you how much money each account is generating on average. So growth isn't just coming from adding more people, but getting people to buy more value. What's fascinating is seeing how their focus on, quote, customer love at scale translates into these numbers. It's not just about acquisition, it's retention. Making them stay, making them feel valued.
Like with that magenta status thing they launched.
Precisely. Those perks, Hilton discounts, movie tickets, car rentals.
$5 movie tickets, 25% off Live Nation. Feels like a VIP club.
Right. It's presented as VIP treatment at no extra cost. It builds stickiness. It makes customers less likely to switch just for a slightly lower price somewhere else. It reduces that churn we talked about.
Makes sense. Plus all the other stuff they bundle in, like streaming deals, free in-flight Wi-Fi, the T-Mobile Tuesdays perks, and they're still winning switchers, expanding in big cities and those smaller rural areas.
That expansion into smaller markets and rural areas, the SMRAs, that's been a key part of their strategy post-Sprint merger, using that combined spectrum.
Okay, so the customer story is strong, but that all relies on the network, right? Let's dig into that. What's going on behind the scenes? This is where it gets technically interesting.
Absolutely. Their network leadership is foundational to everything else.
They keep highlighting their nationwide 5G standalone network. Still the only major provider with one, they say.
And standalone, or SA, is key. It means the 5G network isn't reliant on the older 4G core. It's pure 5G, which allows for more advanced features down the line.
Like speed. They're hitting some crazy numbers, over 2.2 gigabits per second on uplink in tests.
Yeah, using things like new radio dual connectivity and four-way carrier aggregation, basically combining different lanes of spectrum to create a super fast highway for data, both up and down.
And they've been busy building it out. Expanded 5G coverage by over 500,000 square miles since 2021, upgraded over 61,000 sites.
The scale of that rollout is impressive.
And the innovations. They launched the first 5G RedCap device with TCL. What exactly is RedCap again?
Think of RedCap, or reduced capability, as a simpler, more power-efficient version of 5G. It's perfect for devices that don't need blazing fast speeds, like industrial sensors, smartwatches, or even connecting older devices. It makes bringing 5G to those kinds of things much cheaper and easier.
Got it. So broadening the 5G ecosystem, and then there's Network slicing, leveraging that 5G SA network.
Right. Slicing lets them carve out dedicated virtual networks on top of their main network, each tailored for specific needs with guaranteed performance, like for first responders or specific business applications.
We saw that with T-Priority, their slice for first responders, and using it at big events like the PGA Championships, the Vegas Grand Prix, even for MLB's automatic ball strike system.
Real-world applications that showcase the benefits beyond just faster phone speeds.
And maybe the biggest leap, satellite to cellular with Starlink.
Huge potential there, aiming to eliminate dead zones across vast areas of the U.S., connecting standard smartphones directly to satellites. We saw how valuable that could be during those hurricanes last year, keeping people connected when cell towers were down.
So looking ahead, they're pushing towards 5G Advanced, investing in AI for radio networks with partners like NVIDIA.
It connects back to that bigger picture. They're not just maintaining a network, they're actively trying to redefine connectivity. RedCap targets affordability, satellite targets dead zones. It's about expanding the what and where of being connected. This innovation pipeline reinforces their edge, opens new revenue doors.
But does being so far ahead carry risks? Like, are customers or businesses actually ready for all these advanced features? Is the cost sustainable?
That's always the balancing act in tech, isn't it? Investing ahead of the curve versus waiting for proven demand. It's a calculated risk.
Okay, let's shift gears slightly. It wasn't just consumers. T-Mobile for Business also had a, quote, record-breaking 2024. How did they become such a preferred partner for businesses and government?
Well, part of it is building on that network leadership story. Businesses need reliable, fast connectivity, too. They seem to be outperforming competitors in business postpaid ads and churn, just like on the consumer side.
And they launched specific business solutions like that T-Priority slice for first responders. That got them a big contract with New York City.
A major validation of that technology.
Businesses are also adopting their 5G advanced network solutions, the custom private or hybrid networks. They highlighted wins, like with a major oil and gas company, Delta Airlines, setting up a 5G network at their HQ.
These aren't just standard phone contracts. These are complex, integrated solutions, deeper partnerships.
Yeah, and growth in retail, too, like Tractor Supply, REI, Spirit Halloween using their services, even school districts like Houston ISD, plus those high-profile partnerships, PGA, MLB, showing off what the network can do.
And this diversification into business solutions is smart. It builds resilience. When you're providing mission-critical connectivity for a large enterprise or a public safety agency, that's a very sticky relationship. It moves them beyond just being the value player into being a trusted technology partner, which opens up bigger opportunities.
So more than just phones. Okay, let's talk dollars and cents. The financials. T-Mobile claimed ambitious and profitable growth. What do the numbers actually say?
The numbers are pretty strong, you have to admit. Net income, their bottom line profit, hit $11.3 billion. That's their highest ever, and up 36% from the previous year.
36%, wow. And revenues?
Postpaid service revenues, the core mobile plan money, was $52.3 billion, up 7% year over year, which they said led the industry. Total service revenues hit $66.2 billion, up 5%.
And what about cash flow? That's always a key metric.
Adjusted free cash flow, which is basically the cash left over after running the business and investing in infrastructure, was $17.0 billion. That's up a huge 25% year over year. Again, industry-leading growth, they claim. It's cash they can use for dividends, buybacks, paying down debt.
Very healthy. And core adjusted EBITDA.
$31.8 billion, up 9%. Total revenues overall were $81.4 billion, up 4%. Operating income also saw a big jump, up 26%. And cash from operations increased 20% to over $22 billion.
So what drove these results? Obviously customer growth, higher ARPU.
Right, more customers and customers paying more for premium plans. That hits the top line. But cost management was also a big factor. Their cost of services was down, excluding certain items. And crucially, those merger-related costs from the Sprint deal largely ended mid-year.
Ah, the merger synergies finally fully kicking in.
Exactly. They actually unlocked $2 billion more in annual run rate synergies than they first projected. That drops straight to the bottom line and boosts cash flow. Lower spending on property and equipment compared to the peak build-out phase also helped that free cash flow number.
And they're guiding for even higher free cash flow in the future. $19 billion by 2027.
That's the projection, yeah. Shows confidence in continued profitable growth.
What about the balance sheet? Assets, debt?
Well, cash was up slightly to $5.4 billion. The big number on the asset side is spectrum licenses, over $100 billion worth. Shows the massive investment in those airwaves. Goodwill is around $13 billion, reflecting past acquisitions. On the other side, they do have substantial long-term debt, around $78 billion, maturing over many years. Interest expense went up a bit with higher rates, but they also earned more interest on their cash.
So a lot of leverage, but seems manageable given the cash flow.
It paints a picture of strong operational leverage. They're efficiently converting revenue growth into profit and cash. That huge investment in network assets, reflected on the balance sheet, is clearly paying off in customer appeal and financial performance. It looks like a well-managed financial engine right now.
Okay, so strong performance, strong financials. How does this translate into value for shareholders, and what's the roadmap ahead?
They've been very active in returning cash to shareholders. Returned $14.4 billion in 2024 alone. That's a mix of dividends and share buybacks.
Dividends were $2.83 per share for the year, and they just declared another quarterly one.
Correct. Direct cash payments to shareholders. And they bought back $11.1 billion of their own stock in 2024. Buybacks reduce the share count, which tends to boost the earnings per share and potentially the stock price. They still have authorization for more buybacks and dividends through 2025.
So clear focus on shareholder returns. What about future growth drivers? They had that Capital Markets Day.
Yeah, they outlined their next era of profitable growth. It builds on that 5G leadership, expanding into new markets, continuing to push into those smaller rural areas, enterprise, government, and importantly, strategic acquisitions and JVs are a big part of it.
Like buying Mint Mobile's parent company, Keyena Corp.
Right, added 3.5 million prepaid customers there. And the big one, acquiring U.S. Cellular's wireless operations and spectrum. That's a $4.4 billion deal, plus assumed debt. Expected to close mid-2025, and they're projecting significant cost savings, about $1 billion annually once integrated.
They also bought Vistar Media for digital advertising.
Expanding into adjacencies, yeah. Advertising is already a billion-dollar business for them, apparently. And those fiber joint ventures, Lumos and Metronet, significant investments there to build out fiber networks in specific regions, moving beyond just wireless.
So lots of moving parts, lots of expansion. But what about the challenges, the risks?
Well, competition isn't going away. AT&T, Verizon, DISH, the cable companies, they're all fighting hard, often using price or bundles. Industry saturation is real. Cybersecurity is a huge ongoing risk. They've had incidents, as the report notes, and the threat landscape keeps evolving, especially with AI being used by attackers. That requires constant vigilance and investment.
And regulations, FCC, state rules.
Always a factor in telecom. Licensing, spectrum use, privacy, net neutrality. Compliance costs money, and rule changes can impact strategy. Plus, the need to keep up with technology AI ran, eventually 6G. And then there are the broader economic factors, recession fears, inflation, interest rates, global instability.
So not a clear path, despite the momentum.
Never is. This aggressive cycle of acquisitions, JVs, and tech innovation is their strategy, but integrating everything smoothly, managing the debt, and fending off cyber threats while navigating regulations. That's the challenge. Their ability to execute on all those fronts will determine if they truly sustain this champion status long term.
It's certainly been an incredible journey for T-Mobile in 2024. From challenger to, well, they claim champion status, and the numbers seem to support a lot of that, driven by customer focus, that network leadership, and some very strategic financial plays. So here's something to think about. Given T-Mobile's push to erase dead zones with satellite tech and weave AI into the network fabric, how might that fundamentally change your everyday experience of being connected? Could it become truly seamless everywhere? And what new possibilities, or maybe even challenges, does that create for our digital lives? Join us next time on The Deep Dive for another look beneath the surface.